In the last video, I spoke about how some Chinese cities, local governments actually, are entering into fake land deals with themselves to effectively just use debt to pay for operating costs. But the real issue here is how much these local governments are struggling with their operating costs to the point where they're loading up on debt. And the real question that I have, and I failed to answer in the last video, is how pervasive is this? Could this lead to a financial crisis in China? And so that's something that I want to dive into a little bit more. And so as you guys smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. Let's dive right into this. So I didn't cover this in March when it came out because it was too soon after I'd already talked about it. And so I wanted to see a little bit more come out, but now we're starting to see the news reports come out more and more about this issue. And so what exactly did the Wall Street Journal report back in March? Well, they said that, the financial obligations that built on to many of these local governments has now created a bit of a debt situation at the local level. And so you actually had the worst of all situations type of situation develop. And so this is what happened. So, the economy is right now being weighed down by the colossal debts of its local governments, which swelled during the pandemics and are starting to come to a head. And so what actually ended up happening is that you had all these costs at the local level to handle the pandemic. And they're, almost 3-year lockdown, but I want to say at least for sure 2-year lockdown with all the testing, et cetera, et cetera. And at the same time, the property market sort of dried up. And so you couldn't continue to sell land leases, which is the way they primarily generate tax revenue for many of these local governments. And so you had lower revenues and higher costs, which led to a debt surge at the local government level. And so now 2/3 of local governments are now in danger of breaching the unofficial debt thresholds that are set by Beijing, which essentially says that their outstanding debt cannot exceed 120% of income. And about 1/3 of China's major cities are struggling to pay just the interest on the debt they owe alone, according to Rhodium Group, a New York-based research firm. And so I'm not smart enough to determine if this is going to be a larger issue or not. So I'm really relying on economists here. And so here's what you're seeing. So you can see that the percentage of non-financial sector debt as a percentage of GDP. And so China's debt ratio climbed during the pandemic. And so, the main concern, it looks like by the economists, isn't that China, these cities will default and trigger a financial crisis, though economists do say that it can't be ruled out. So it is an issue or a risk as you consider investing in China. But the real issue is that the cities will have to keep cutting spending, delay investments, or take other actions to keep creditors at bay, which of course will impair the growth of these cities and just, the country as a whole for many, many years. And I don't think the federal government there can bail out all of the cities at once. And so I do believe that you're going to have spending cuts happening all over the place. Now, here's the problem. You have an aging population in China. And as populations age, spending requirements go up, not down. So now you have a situation where you have to cut spending while your population is aging. And of course, you're going to get political instability. So you saw in February that there was hundreds of people protesting as the government cut medical benefits. And so you can see here, hundreds of older people protested in the central Chinese city of Wuhan on Wednesday as part of what appeared to be a broader groundswell of frustration around the recent government changes to the National Medical Insurance Program. And I think you're going to see more of this as more and more government programs get reduced or canceled. Now, here's where I have to do a little bit more work. And so you'll see me working on this as the year goes on. But economists note that Beijing still has plenty of fiscal room to intervene in individual cases if necessary to prevent major defaults. However, the central government's balance sheet is not strong enough to bail out every contingent liability in China. So you'll have one-off issues that can be bailed out, but you're going to have other issues that they're going to have to come up with their own solutions. And so, moreover, a one-off series of bailouts would increase moral hazards and not change the underlying dynamics that led to the problem in the first place. And so local residents, especially civil servants, may see more salary cuts and reduced services. So that's exactly what I see coming down the pipe here. And so once again, some analysts say Beijing is unwilling to make changes that could put local governments' finances on a more stable footing, such as implementing a property tax to raise more funds, because doing so would be politically unpopular and could undermine central authorities' control over localities. But here's the problem. Would you rather undermine central control over the localities or would you want to create a situation where you have a larger financial crisis in the country? And so I think they sort of have to get over it. And here's something that I pointed out in the last video. It's not as easy to push the property tax in China as one would think. Xi Jinping actually faced resistance to the property tax plan, and so they actually had to scale it back significantly in order to get it to move forward. So, you know, you're going to have continued issues as a result of debt being accumulated to pay for current spending. You're going to have political uncertainty as a result of people pushing back in face of reduced government spending at the local level, and you're going to continue to get pushback with rolling out property taxes to the country as a whole at the local level. And so let's see how this plays out. But once again, this is why I stress diversification. Now, if you missed the last video, no problem. You can get access to that right here.